Welcome to Chart of the Day. I'm Robert Folsom. How we forecast the July dollar index collapse back in April. Here's the U.S. dollar index in 2023 so far through Friday, July 14th. As you probably know, recent days have seen lots of financial news about this, the large decline in the dollar. Headlines like these can send investors down the rabbit hole wondering if trillion-dollar debt and rate hike pauses and cooling inflation and a global battle over cash somehow connect to the dollar's decline. But dear viewer, it's not worth a single moment in the rabbit hole. These connections are non sequiturs. They don't follow. And if you don't like Latin phrases, how about no way? So, instead of the after-the-fact speculation, here's a better and faster way that did anticipate the dollar index's trends and turns before those price moves unfolded. The index was here on February 1st. On that day, our short-term update showed a chart and headline saying a 5-wave decline from September. On the morning of February 3rd, our monthly financial forecast said the end of wave 5 will lead to the largest rally since the September high, so be prepared. Here's the rally that followed through March 8th. On that day, short-term update said the index has now met our initial target range of 105,631 to 106,152. The action immediately after confirmed that this wave A peak was in place and price continued lower into April 14th. After that day's close, short-term update labeled the B wave down as complete and alerted subscribers to the potential triangle pattern. Here, that meant a contracting triangle, which is the Elliott Wave pattern that we referenced a moment ago. This idealized graph shows the sideways move and 5 contracting legs. After that, price turns sharply lower. Back to our chart. On April 17th, short-term update said, the rally now underway is counter-trend, but should last several weeks longer and carry to at least 104 and likely higher. That day's chart in turn showed subscribers a forecast for what the pattern would look like as the rest of the triangle unfolded. The C, D, and E legs, then the sharp turn lower. This is what followed. Our commentary identified these turns for subscribers in real time. The C wave ended on May 31st, the D wave on June 21st, the E wave ended on July 5th. After the market closed on July 5th, the short-term update chart headline said, Wave E is at or near an end. It was at the end. The dollar index closed lower for 6 consecutive sessions, July 6th through the 13th. From the end of the E wave, the index fell nearly 4%, which for the dollar index is a large move in a short time. To anticipate this pattern in mid-April, equipped short-term update subscribers to be ready. As a series of near-term trends and turns unfolded for 3 months, most especially the opportunity at the end of the pattern when price moves in its rapid, decisive thrust. Here's where I say not all forecasts work out this way. Please see below for information about a financial forecast service subscription.